Yeah. I need chicken leg. I have chicken leg with me.
Welcome to the GSB. My name is Ralph Hamann. I'm here at the GSB with some other colleagues working on issues that Graham is going to be presenting on. So I'm very pleased to have such a good number of people in the room and some expertise as well on these issues. And so hopefully, no doubt also, not only will we get really some interesting insights from Graham, but also look forward to the conversation, questions, and discussion afterwards. Graham, I mean, you see his bio in the invite. I'm not going to give him much detail, but I think suffice to say that Graham's a well-known name in the responsible investment field in South Africa and beyond. He's worked for KLD at some point, has done reports for the IFC, is a founder, I think, of Africa Social Investment Forum, so very active in bringing socially responsible and sustainability investment to the fore, really, in a very network kind of way, bringing it beyond South African borders into discussions with multilateral organizations like the IFC, with governments around Africa. And so I think it's been playing a really important role in South Africa and beyond in making these things prominent in people's awareness. And in his day job, I think, is working with a company, Simco, which he set up, which basically does consulting in this field. So Graham, I think we look forward to your comments. And how do you want to take? You want to take questions as you go? You want to take questions afterwards?
I'm happy to take questions as you go. That's okay.
Sure. You basically do whatever works for you, and hopefully we will drag together a conversation at the end. We look forward to your interest.
Excellent. Thanks, Rob. And my thanks to Rolf and Talman for the seminars as such, and for inviting me through here today. What I'd like to do is I'd like to do something unconventional, perhaps like Mr. Amla, who has his hair upside down, as some British wag said. I'm sure he dealt with that problem. One of my favorite quotes about that really was, if it was a timeless test, he would still be batting today. It's possible, right? But what I'd like to do is start with some questions first. So I know why I'm here, and Ralph and Talman know why I'm here, but I'm not sure why you're here. So I just want to cherry pick a few questions that are in your head based on what you've seen in the agenda and the promotional item. What question do you hope to get answered? So I'm just going to pick on a few people, but I won't pick on John because I know he can be difficult. At the back in the blue top. So. What question did you come to get answered today?
Thank you very much. I just arrived a few minutes ago. I know that the committee is about security improvement in Africa. I would like to know, for example, what do you think about the investment in low-count site management in developing countries? What do you think about the future 10, 20 years investment in natural resource? It's going to be sustainable or not? Currently, things are not balanced, are not beautiful, are not good, I can say, but still have doubts if the future will be sustainable or not because of the way their resources are being exploited.
Thank you for your question. This lady with the scarf.
I think my main question, I've traveled extensively in Africa, and every time I go there, I think like, inspirations. How can any company ever invest in some of these places? So I think the question that I basically come to here is, from your perspective, what do you think? Like, is there a potential for future investments? And is Africa really the next continent that's really going to be tapped in? So, yeah.
Thank you.
A lot of the interest in Africa now probably is fueled by the success that China's had. Obviously, Africans now starting to see that it's not all good doing business like this way. So, do you believe that the future of sustainable development is more the Chinese model, or is it more a free market Western model?
Okay. And at the back.
I would like to find out how things have developed, especially over the last year, and specifically with regards to sustainable investment as a vehicle in terms of measuring sustainability of companies and how reliable that whole process is and what the development is in terms of actually measuring what is sustainable in the field of sustainable investment.
Great. And how's your PhD?
It's going.
Okay. So tracking, measuring, metrics, checking for sustainable development, kind of the Chinese model and other models. I've got comments about how even do investors think about what actually put money here, and then questions about resource extraction and sustainability. Yeah. So let me, I just want to pick those up to figure out kind of why some of you are here. I've got a slide deck prepared and I can present, and I have external peer review mechanism in the front row who will help me stay on track. Yes, he's quite observant, he notices when the screen goes. He's superb external peer review. So a little bit about me, so kind of where am I coming from. I happen to be born in Durban on the wrong side of the hill. That means I did not get the sea view. But I did visit the sea often. In fact, was one of my happiest moments was becoming a surf lifeguard at Durban Surf. So it doesn't normally make my bio, but I thought it was relevant here in the waterfront. My work since 2006, when I set up Cinco Sustainable Investment Consulting, is a small advisory boutique that answers the question, how do you make sustainable investment happen? And what are some of the new strategies or approaches and some of the architecture that you'd put in place as an asset manager to achieve the goals that you're looking for? So I work very much in the world of investment management. That's kind of my sphere of influence, or what I know best, with some history and background in pensions consulting and investment management. Today's agenda, just to contextualize us, in my view, I don't know when you decide to switch off the lights, but can everyone see that at the back? Can you see that? Is that okay? All the seats in the front. There's an option. So there's been a lot of activity around ESG, environment, social governance, your jargon for the day. And there's been a lot of activity around sustainable investment. Okay, that's a very, okay, unless you want to play some slow music. There's also been a fair amount of academic literature dealing with sustainable investments, as well as there's a number of initiatives in place. So what I'm going to take you through today is just an extract, a small piece of what we have available. It's by no means suggests that it's exhaustive. But what you should have by the end of my comments this morning, this afternoon, is some idea of the challenges that we face, some idea of what the market looks like, and some of the places or directions that we're looking to probe for answers. Yeah? So you should come away with some better questions, and you should come away with some answers. In terms of the shop, the work that we do, we work in emerging markets. Right now we're building a sustainability index in Turkey. We're working with the Access to Nutrition Index, the idea we developed in 2008, and that's working in Mexico, India, South Africa, and globally. That should be launched early next year, looking at food and beverage companies and how they're fighting malnutrition. So all of the questions that you have in your mind, those are the ones we typically deal with and show them through. You can find more information at our website, cinco.com. Fairly relaxed, kind of within reason. If you want to email me afterwards, my email address, just email info@cinco.com, and we'll tackle your questions as best you can. I don't have the answer to your thesis or master's problem, in case you're wondering, and I don't have some amazing data set that you have never seen. A second hat that I wear that Rolf referenced is I'm president of Africa's Sustainable Investment Forum, africasif.org. It is not a fund, and that's why I refer to africasif.org, because I spent the first year explaining to people it's not a fund. But it is people like you, people like me who work in investment management, or the services around investment management, that are proactively thinking about making sure Africa, as more capital comes to Africa or is invested inside Africa, that capital integrates ESG factors. We're of the view that most of us are Africans who work on a project, and we're open to members, both individual members and corporate members. But our view is that there will be more investment in Africa. The only question is, how will that leave Africa, perhaps in 20 years' time, as gentleman's question suggested. And there's 3 elements that I'd reference for you directly. Here, on the 5th of September, will be the ESG Masterclass. It's targeted at pension fund trustees, asset consultants, multi-managers, and a few PhD candidates, as we had last year, who would want to come and learn kind of cutting edge from a variety of lecturers what's happening in ESG globally, but also in Africa. And that evening we'll also have a networking event you're most welcome to attend. And then the other major element, which is what I'll land on in my prepared comments today, is the AfricaCIF.org Marketplace Trends Report, where for the first time ever, we're tying to the CIFs globally, so North America, Europe, and Asia. Every 2 years they do a market study. For the first time ever, we're kind of plugging Africa into that overall study. So there's 2 outputs from that, and I'll deal with it in my final comments. And I'm glad the first question the gentleman asked, kind of what's going to happen in Mozambique and resource extraction, and the question also about the tracking impacts, and the question about how do you even get this done. So some of the reality check when I'm talking to investors in Africa or outside Africa is this is an African reality for me today. This is a photograph I think I took end of last year. I'm sure you can take many even this afternoon. But for me, I get a lot out of this. One is it's the road to where my parents live over the mountains in Villiers. But more importantly, I wonder what the cargo ship from China or somewhere else delivered that particular week or afternoon. I wonder about how brilliant and efficient the logistics system is, and so if anyone at UCD has studied that, I'd be interested to know. But most of all, I appreciate that here you see Africans who got up on a given day, on a sunny day, where they could have been at the beach, they could have been just drinking, they could have been hanging out with their mates, smoking something. But here you got a bunch of Africans who bothered to get up that morning and head out and do something. I don't know how many rands they would make on the sale of a power cable or an oversized soccer ball toy thing. But if we think about sustainable development or investing in sustainable development, which is where I spend my time, I'm thinking about how do we get money to these guys. I'm thinking that we achieve something by integrating environment, social governance factors into investment in Africa. These guys would benefit. People like this. One of the first things that you'll know if you've looked at Africa in any kind of detail is how many countries in Africa? Okay, everyone, as a key takeaway, can I give homework, Rolf? Okay, everyone should know this. This is embarrassing.
You didn't do the marking, however. That's the question.
Well, there's only one answer, so I refuse to mark anything else. So everyone in this room should have, at the same time, said, with enthusiasm, unless you deal with Western Sahara as an open political item, is 54 as of last July. And the most recent African country was? All right, everyone knows that because that makes the Maori Guardian. Okay, everyone should know, no doubt, is 54. The more intriguing question as an investment person is, how many effective stock exchanges are there? And I don't mean like TropX that's launching in Seychelles, which is kind of like a shadow exchange, but the stock exchanges that are located in country. That's, I guess you could say that about TropX. But one of the things you'll observe if you study country by country and look at their investment marketplace is some countries don't have a stock exchange. Like a very fundamental, basic mechanism for markets to work in a financial investment sense. One of the other key takeaways, and I picked up a hint of it in my 4 opening questions, was we're in Africa too, but there's different types of Africa. And so when you look at it from an investment marketplace point of view, oftentimes as investors you talk about South Africa and rest of Africa, ROA, rest of Africa. In other circumstances, sometimes from an economic mindset, you might create the 4 poles, North Africa, West Africa, East Africa, and Southern Africa. That's how you might carve it up if you're thinking about it from an economic, business, or investment point of view. For investors, if investors are thinking about investing into Africa broadly, they're going to look for an index or an entry point. If they're not investing directly into exchange, they're looking for an index that tracks listed stocks, for example, on that particular exchange if they're not going to, say, pound equity, asset class, and so on. And so in Africa, you pick up some major markets. Obviously, South Africa, Kenya, Nigeria, Morocco, and Egypt. Those are all on the MSCI Emerging Markets Index, or the frontier markets, kind of one layer down. So your sophistication of your markets and your availability for entry points for investors, if they're looking at listed equities, but even if they're looking for other asset classes or comparable data, is really going to depend on what's available, what's the infrastructure for their investment decision. So just the availability of financial data in Africa is what I call a competitive advantage. In other markets, analysis of information, of data, is a competitive advantage. In Africa, just having the data point can be an competitive advantage. Another important point to make is the role of DFIs, development financing institutions. This could be China Africa Development Fund, it could be IFC, it could be CDC out of the UK, FMO out of the Netherlands, Parker out of France. But you have situations where there's historically has been an aid effort, but more recently, I'd say in the last 2-3 decades, has been more focused on financial investment or investment into entities through asset classes like private equity, sometimes into listed equities. And this is one example of IFC's footprint into Africa. And it explains in some way why we have two reports. You've got a postcard on your chair when you sat down. Well, it was IFC's advisory services team that put up the money, or put up the organization, funneled the money to make available this money for the research. So if you think about, this is where offices are available for IFC to put a footprint. This also gives you an idea of where you can find that information, or where investors may look to travel to leverage or partner with the IFC because they're on the ground and have some of that experience. So there's two reports that the IFC funded they did a series of reports from 2008 to 2011. And the one that dealt with North Africa focused on in a regional way, similar to what investment managers would think of. They often group Middle East and North Africa together because there's so many cultural and economic similarities. And this report found a chunk of money, 50-odd billion US dollars at that time that was invested. But that covers all of Middle East. We don't really know what the North Africa piece was. It didn't come through clearly on that report. So, for example, when you think about what we're looking to deliver for the AfricaSIF.org Marketplace Trends report this year, we're hoping to get to a more accurate or crisp number. One of the things that they did with this report was, because there was not a lot of information and it was hard to figure out what was available, they went down a route of explaining is sustainable investment enabled in the current environment? So is there a regulatory environment? Is there a government policy environment? Are there private sector actors that create the conditions for sustainable investment to take place? Unfortunately, they released this report in January 2010, and any of you would well know that the whole political environment across North Africa changed fundamentally. So that's why our study at the end of this year will be interesting in a second way to see kind of where things have landed. A final point on that is, one of the realities around sustainable investment is, if sustainable investment is a theme in asset management, if there is no asset management, there is no sustainable investment. So for example, Egypt has an ESG index. They've had it since, I think, 2009. They launched it with the S&P and the Holkama Institute, partly on the back of some work that the Indians had done, and we hosted a presentation when I was at the UN at the Palais, where they were very excited about this idea. So they went ahead and launched the project. There's an ESG index in Egypt, on the Cairo and Alexandria Stock Exchange. But when the stock exchange had ceased to trade because of the political upheavals, there was no ESG-enabled investment. There was no ESG index to invest in. And I think that's one of the fundamental understandings to take away, especially in areas with political risk like you have in Africa, is that if you think about ESG integration into asset management or sustainable investment, investing for sustainable development, that is a sophistication, or it's an approach that rests on some very basic fundamental items, including having data availability, trading of investment opportunities, but also that the political system is stable. Differently, in my lifetime, I never think that sustainable investment will prevent a revolution like we had in North Africa. I don't think that's possible. You have a question?
Yes. I was curious to know how you define sustainable investment.
So the two reports worked of an IFC definition, which I've got on the slide in 2's time, you can see. But very quickly, it deals with ESG integration into types of investment. In the IFC's worldview, you can see where they describe their findings of the report. They referenced Sharia-compliant funds separately. Sharia funds are kind of religiously motivated norms that one would find similar to Catholic funds or Jewish funds. And those are kind of the focus for this research, but they do form kind of a component of sustainable investment.
Yeah, I actually had the same question because I wasn't sure whether everyone would have maybe read some of these reports to me and been aware of what you mean by sustainable investment, how you delineate it from other investments.
Okay, sure. So yeah, and so
that's fine.
Sure. So and stepping out of the report approach, the approach that I take as a practitioner and what I use in my shop is I talk about sustainable investment as an umbrella term for integration of environment, social, and governance factors into asset management. So in my view, that it's a broad term that encompasses responsible investment or socially responsible investment. It encompasses environmentally responsible investment, encompasses impact investing, ethical investing. For me, those are kind of sub-themes within an overarching approach that says sustainable investment is about a proactive and explicit approach to integrating environment, social, and corporate governance factors into the asset management process as important and material factors. So the second piece of research is the one that I know much better because I worked on it with colleagues at Riskira, and we have a colleague from Riskira who's with us today. And there we took, it turned out to be a 2-year project because there was a whole lot of heavy lifting. And the focus there was on sub-Saharan Africa, looking at Nigeria, Kenya, and South Africa as your 2 cornerstone economies, but then taking in some general overview as well. Your key takeaways there are we did find significant sustainable investment. That sustainable investment was largely located in the largest investment market in Africa, which is South Africa. So I don't have the graph with me, but if you look at kind of institutional investment marketplaces, it seriously drops off almost like a backward geometric curve when you look at what you can do in South Africa versus the other countries. And because South Africa overweights in this study, what was happening in South Africa was therefore very important. In South Africa itself, the institutional investment market is dominated by one player with kind of 2 parts. The government employees pension fund. It is a sovereign wealth pension fund in South Africa. It's a defined benefit pension fund. That means the South African government and their kind taxpayers fund this particular retirement fund and will backstop any losses to the fund. So it's a type of fund where the government is effectively the guarantor of the benefits to these pensioners, these people who leave the fund. The GPF has over R1 trillion in assets. Now, most of its assets, about 92%, is managed by something called the Public Investment Commissioner, PIC. And the PIC itself manages 75% of those assets, roughly. There's an article today in Business Day to get some fresh information. And about 25% they outsource to third-party asset managers, your Coronations, your Old Mutuals, your Solomons, and so on. So, from a survey point of view or marketplace mapping point of view, you can understand there's going to be a little bit of double counting if we go and ask Old Mutual, what are you managing? Or we're going to ask PIC what you're managing, and we'll ask GRPF, all right? So part of what we had to do in the study was try and, on a reasonable basis, try and filter some of that out as best we could. Because the other thing you might well know about investment managers is they aren't that open with a lot of their data, right? Some of their competitive advantage is their secret source or their secret information. On any given day, they would rather not share the information with you. In some ways, similar to the government. So what I thought to do also is to give you some insight into what we found in this study. Then I'll give you some key points on a new report that we're doing just in August. We'll release kind of 1 year later on this project. Then I've also been doing some work on the Sustainable Returns project in South Africa, working with the pension fund industry to map that, and then land with the Advocacy.org marketplace report.
I'm sorry,
Sure.
perhaps you mentioned it earlier, but can you give us access to this PowerPoint?
Yes, I can. I don't know what the standard approach is, but
It's fine, just send it to us.
yeah.
Perfect.
Sure. And all these reports are available online, and where possible,
Yeah.
I've footnoted them on the presentation. And yeah, sorry, on the back of your postcard, there's the URL to this report at least. So to flick you through very quickly through some of the findings that I think are important for myself as a sustainable investment specialist. Well, when we did the study, and we asked kind of three groups. We asked private equity, this is partly driven by the mandate from a client. Private equity, because private equity is one of the kind of advanced investment categories. If you're going to invest in a country, there's no stock exchange, or there's a stock exchange and it's illiquid, it's got 10 stocks, like Seychelles. Or you want to enter into many sectors of the economy, well then you want to be entering through venture capital, private equity. So it's equity in a business, it could be fixed income instruments, it could be the debt side of the balance sheet, but it's not listed on an exchange. So in Africa or in other frontier markets like Turkey or Mexico or Indonesia, going in through private equity is one of your entry points as an investor. So we looked at private equity, we looked at general asset management, and then we also asked a stakeholder group, people like Professor Haman here, someone who's involved, who studies it, who meets and thinks on these issues. And so this is an answer to the question, identify the importance of these factors in choosing to invest in sub-Saharan Africa today, and this is just a very important answer. It was a graded scale. I hope I'm checking enough marks here for my PhD type that it's not too mushy. For me, the second finding is important. The first one is a no-brainer. Any of you MBAs, if you don't get that first answer right, then you may want to just take out creative arts or something. If someone asks you, why did you invest, you want risk-adjusted returns. But the second item is really interesting in the study. And one way we had it described to us by a private equity investor that I think you might appreciate, he said, when we look at a company, private equity investors, people have trusted us with their money with 5 to 10 year horizon. When I think about corporate governance, I think about it only in two ways. One is the corporate governance is good enough today, or I can kind of get it there, or I don't want to invest. Because for this private equity investor, they've got a very immediate and direct relationship with their money on whether they're going to see it again or not. And I thought that was a very interesting approach. There's been some excellent work, for example, by CDC and Actis, and they've got toolkits and frameworks that I can point you to if you're interested in this area. And obviously, corporate governance can be a long list or a short list, but I really appreciated how that insight from the private equity manager got to the core of the issue. It's like, I was going to see my money again, or I wasn't. And that maps, I think you'd agree, in business management thinking to management quality. Yeah, kind of the X factor. If you talk to any investor, what are you really trying to find from this company? You're looking for management quality. Some of the other classics you'd expect to find, like political, economic risks, and environmental and social risks were further down. A surprising finding, which might jump out at you if any of you are studying these markets, is liquidity. Often liquidity is flagged as a huge issue. Most investments have carry a liquidity premium, but our interpretation of this finding is most of the investors we're working with had sufficient liquidity in their portfolios that this wasn't a direct concern to them. It may be a concern to kind of the next wave of investors out there. A second critical question, and I apologize that the writing is quite small, is we talk about influence. Who are the influential investors if you're looking to invest in Africa? Now we've repeated the study for this latest research we've done in the retirement funds industry in South Africa, and we have different findings. So what I look forward to once we're allowed to release those results, kind of comparing and contrasting those two. But out of this study, we picked up the international financing institutions were the most influential, followed by the institutional investors with the local country mandates. And then it was quite close between the regional development banks and the Pan-African mandates. Again, that's taken as the most influential, second most influential, and third most influential 97 investors and stakeholders. So if you're thinking that investment is a competitive marketplace that works in an ecosystem effect where people talk to other people and form impressions, this is a useful finding to think through if we are going to improve the environment, social, and governance factors or their use in Africa. These are some of the influential people that we'll need to be talking to, or if things go well or poorly, people are going to be watching what happens with their portfolios. Another useful finding for us revolves around awareness. So the other way to invert it, and in some way this goes to the tracking question, if you ask investors and stakeholders which companies or which sectors are aware of ESG, which obviously means they're talking to you a lot about it, or at least they're raising it in your conversations, or they're being tracked and having to report on it. So as you might expect, oil and gas that came out right near the top. I was a little surprised that chemicals were relatively much lower, and gas and water utilities were much lower. Mining second, again, you'd probably expect that. But what was very interesting for us was banking and financial services. I don't know if you saw 2 days ago in the Business Day, an article about the environmental liabilities that banks take on when they bank a project. And now, in South African law, they're trying to reference to the US law, where banks can kind of circumscribe their liability versus in one interpretation of South African law today is a bank could remain liable throughout the project, not just at inception or when they first banked the project. So that for us was very interesting. It frustrated a little bit I would argue it frustrated some of the stories that some of the funders were expecting, because power generation is obviously a key element in any kind of low carbon future. And telecoms, well, everyone knows Africa is a cell phone story, so I think in some ways they're hoping cell phones would pop up near a time. They didn't. One of the great problems for us in this research, and it still exists today and we face it going forward, is a question that both John and Rolf asked, which is, what is your definition? Okay. So is it a Rorschach? How do you pronounce that? The test that looks like a butterfly?
Rorschach.
There we go. So in some ways, if I could pronounce it, I can make a convincing statement. But in some ways, talking about sustainability or sustainable investment reminds me of that. Yeah, it's like you look at the diagram and it could be a butterfly, it could be other things. One way we tried to get to that was we asked the open-ended question. We got it in different ways too. But one of the ways we tried to get at it was to ask, well, how would you define sustainability? The problem as research is that we got such a wide response. We grouped them as best we could, but there really was a large range of variability, which is useful in a kind of a context-based feedback loop. We did use other ways of kind of aggregating responses. This is the actual kind of quote-unquote definition that we use for the project. Sustainable investment, an umbrella term for investment techniques that integrate environment, social, governance, value drivers to financial research and investment processes. That's the one that's the IFC's definition. So one of those things that you should go away with that are open questions for us is, how can we accurately describe sustainable investment in Africa? So we can describe elements of that, we can group people, we can get them to respond to certain categories. But that's turning over ahead. But it's really difficult to get to a definition, or one definition that suits everyone. So it's one of those fantastic things is, and I found this over like the last 10 years, if you give a presentation on sustainable investment, people are very interested and they want to hear from it, but then they seem surprised that you don't have the answer. They seem surprised that in as much as they arrived at the presentation with their own interpretation of what sustainability means, they seem surprised that that could be difficult in the industry. So one of the ways we get at answering the question, if people, we can't actually tag them into a black-white tick box situation of the definitions, one way we try to get at that is to turn it into an investment context. So if we don't really care what words you use to describe sustainability or sustainable investment, let's look at what the impact would be on your investment approach. So one key question that we'd ask is, so these ESG issues, how are they going to impact, in your view, how are they going to impact your 10-year performance? You take 10-year performance because it's a long period, in some cases ultra long. And so importantly, you're not asking people, are these ESG issues important to you? You're not trying to cherry pick off some list and say, yeah, water's more important than HIV. That's irrelevant. What we're trying to do here is understand sustainable investment in Africa. So we're asking, what would be the impact? And of course, corporate governance scores right up front. Interestingly, so does infrastructure development. So here we have people reacting to, it's just to have the road or the telephone, or if you think of soft infrastructure, hospital, police, etc. Just to have soft infrastructure can be as important for sustainable investment as some of these other areas. Water scarcity and so on. So the findings are the findings, and we can read about them in more detail.
Sorry?
Yes.
Okay, I have 2 questions.
Just one at this time.
Okay, one. Can you please clarify emission of greenhouse gases? And from the previous graph, I saw something on electricity.
Yeah.
So can you please clarify a little bit what they mean by electricity investment as well as emission of greenhouse gases? This will be a funding, or it will be a funding which will be allocated to clean energy, or what kind of investment that there will be?
So so the previous question was asking what sectors are you finding ESG awareness? So in the electricity sector, generally speaking, they found a certain level of awareness, which is relatively low. It wasn't near the leaders. In this situation, we're asking the different question, which is if you had to invest, okay, not necessarily invest in electricity, any sector, what ESG issues are worrying you over a 10-year period?
Okay, like, because I was more interested on emission on greenhouse gases, how those guys actually what can you do address the issue in the next 10 years.
Exactly, so there's lots about this. I mean, I could have done the whole hour just on this chart for me. I mean, and based on, we wrote the Dirty Feet report that came out this year, looked at the carbon footprints of the JSE 40, the 10 largest unit trust funds, is a disconnect. So if you properly price carbon at 70 or 200 rand a ton emitted, the impact on the unit trust funds is going to be significant. Some famous funds are not going to be so famous anymore. So that's we can pick that up offline. In terms of drivers and barriers, these are fairly similar to what we've seen in our work elsewhere around the world. The classic business case always comes up, good investment returns. Having an explicit impact, I think that tracks to the comment earlier, and more information. What's interesting in this current work we're doing in South Africa, the more information question keeps coming up. So I think that gives a great amount of opportunity. There's also a question about looking at the target and the ESG related performance. So there's a great opportunity in the investment industry to think about attribution analysis and tying that back to ESG factors. Currently, that's not currently there. So these two I would also put in the bucket of kind of making the case for sustainable investment. I'm going to skip over that. Something I thought was interesting, understanding this was a study in Africa. The question we asked here was investment roles and where ESG shows up. So the question is, how will ESG become more important in the next 5 years? And we've got private equity investors in dark blue and asset owners and asset managers in light blue. Okay, so no stakeholders in this slide. What's interesting is everyone points to risk management, and that's often how ESG is solved. You wanted to have good environmental records because you don't want your CEO to be pelted with mud by some NGO protester, for example. So that's fairly obvious. Marketing, well, for me, this partly reflects the greenwashing threat. And if you ask my frank opinion, yes, there's absolutely greenwashing happening today in the industry. And we'll have to figure out as an industry how to deal with that, or the consumers will. But two elements that are kind of startling for me, or particularly this one, I think standing here at UCT GSB and giving this lecture, is the recruiting of investment professionals. And everything we're seeing about Generation X and Y, and particularly the MBA hires, is more and more interest in doing things that have a positive or a sustainability profile to them that perhaps wasn't as apparent 10 or 20 years ago. Maybe even how we came to have so many people at this lecture here today. So this for me is a complete disconnect between the people that we're interviewing and the data that I'm seeing and the analysis that I'm making. So that's a rich area for further research or for positioning your career. One finding that I wasn't satisfied with coming through the study was looking at the life cycle of private equity. If you break the life cycle of private equity into fundraising, due diligence, fund management, and the fund or company exit, the four kind of classic steps in private equity, we had a situation that we could partly explain, but I was never really satisfied with the explanation. And the question was, how is ESG used in your investment life cycle? We were asking these various private equity funds. We had 48 different investors respond. Their contention, which we were not able to test through the survey instrument, which would be a subject for further research I'd love to get to, is at least 3/4 of them mostly found that suggested they were using ESG often. So at least that, and then sometimes and so on. What is fascinating was some of the responses. So this is less than 60% at the exit level. So some of the argument that was made was, well, if you've used it in the first 3 steps, why is it missing from the 4th step? And some of the response we had in the interviews and ongoing conversations for the analysis was, that's because if it's been integrated all in as fundraising, due diligence, especially that, and then through fund management, then it's not really that relevant at the exit. It is true through some of our anecdotal research and some of the research that managers gave us access to, that they were actively positioning their companies as, how can I put it, polished. So they had polished the corporate governance, or they knew there was no environmental skeletons that were going to fall out the cupboard. And if you look at most of the exits in private equity in Africa, most of them are trade sales. They sold, company A gets sold to Nestle or ExxonMobil or so on, versus listing that particular company. So that if you can offer a multinational a higher level of ESG, you're probably going to exit at a better valuation. So that was part of that fundamental driver. Just very quickly, kind of brand names, like who's well regarded in the industry. In terms of private equity, the IFC is right up there. Future growth, and mainly future growth, but Old Mutual's reference to in the asset owner or asset manager category, or answering for. At the stakeholder level, the role of GPF was very, very apparent, but future growth is one of the well-known brands there. So that's, again, you can find this in the study on what the survey felt was important. Just as a way to reinforce the numbers, in terms of this market size, in asset management, South Africa, nearly $600 billion. The other markets taken together, around 18, and giving you a total. So there's significant market size difference, which explains why, for example, BlackRock, the world's largest asset manager with over 600, I forget now, 6 trillion? No, not that much. Yeah, the world's largest fund manager will be launching here in South Africa in August. So just a huge significant step change. I'm going to land, you can look at the slides another time, but I want to get through to the Sustainable Returns Project. We did take these findings into briefings that we had in Ghana and Nairobi, and we had, as well as here in Cape Town, we had some very interesting interactions. I'm going to skip over that. There will be an update report called 1 Year Later that's going to be coming out probably in August, where we look at just a short kind of review paper that we'll be doing together with CRISA, MSCI, and Bloomberg, which looks at updating some of that information, because our project was 2 years long. By the time we published, some of that I think was a little dated. And also there was so much activity locally here in South Africa that a lot happened. Well, what was some of that activity? I've titled the slide here kind of ESG greater than greenwashing. I work in the industry and we talk frankly here. So yeah, absolutely there's some greenwashing. There's also reality checks. So the bullet point for me that jumped out, I did a bunch of stuff around COP17 for some clients, and we did stuff in the industry, and that was great. But by the end of last year, we had an all-time high in CO2 emissions. So I'm kind of realistic about how many conferences we want to have and how much stuff needs to happen and how many assets actually need to flow. So one of my favorite questions, I'm not going to ask it now, is how many of you have explicitly asked your investment advisor to integrate ESG factors into your investment portfolio or unit trust or pension fund? Other major kind of activities, one very importantly was at the regulatory level. So a big deal that played through in January this year in South Africa, your major market in Africa, was there's now a section in the law governing pension fund investments that deals with ESG. That wording was put together by a team of us in the industry. We lobbied the government, and it got into the preamble and into one of the 9 principles. That's a big deal. That's like world best practice. Secondly, in July last year, CRISA was launched, the Code for Responsible Investment in South Africa. 5 principles, similar to the King Code, but for investors, and we could look at that in more detail another time, we'll come back to it. So that's a big deal. That's the laws changed to make it possible, not compulsory, but possible. And secondly, there's this voluntary initiative working to make it happen in your biggest market in Africa. It's such that anecdotal evidence from the major investment conference that just happened now in Rio after Rio +20, where people were approaching the South Africans, people from Europe and America approaching the South Africans saying, gee, what are you guys doing down there? How's it working? Tell me more about it. Our report, there was also a great report on proxy voting that I'd recommend to you, with the big gaps between what asset managers say and what they do and what they publish. I referenced earlier the portfolio carbon report that Sinclair did with TrueCost, looking at the carbon footprints of the JC40 and the 10 largest unit trusts. Another major, because it has industry implications, is the IFC has updated their environment and social standards for their sustainability framework, which will have an impact on Equator Principles 3. It's going to be the next iteration of Equator Principles 3. I referenced COP17 and then Rio 20. Another item, didn't have space to put up here, but we'll mention in the paper, is the next version of GRI. GRI 4, G4 will be coming out. GRI is a framework for reporting on environment, social, and governance factors. Just very quickly on the Sustainable Returns Project so we can take some more questions. The Sustainable Returns Project is a project that kind of came out of this report that we did in Sub-Saharan Africa. It was focused out of the pension funds industry, Principal Officers Association. There's multiple parties involved. You can see the whole laundry list of people involved. And one really important thing that we got to do there was we got to kind of update on where the South African market is. Partly by using a report in 2007 by Neil Eccles and CRISA. And then our work is what we've built into this report we've developed onto the retirement fund investment value chain, which relies on 3 separate surveys that are all linked. One is a large fund survey, looking at we've got 71 responses. It had gone out to 156 retirement funds. Secondly, an influence makers survey with people of influence in the industry, and then the steering committee of the project themselves provided input. So from that, a fairly kind of rigorous, exhaustive approach to figure out what is going on and what are the points of views and opinions. Let me jump very quickly then to the takeaway. One of the key takeaways, and it was reinforced again this morning with the Sundown benchmark report that came out, is there's many, many people who are going to retire with insufficient income. That's fundamentally the goal. When I teach on sustainable investment, I start with basics around asset management. And asset management is really about growing assets. and returning them to the rightful owner by the professional industry. So the biggest issue that's facing the industry, there's a Treasury paper that's open to the end of this month if you want to give some input into it, is looking at the actual retirement fund system. Is it doing what it's meant to do? The second point is that retirement funds are major investors. They can have significant influence. They're right up there with sovereign wealth funds. Most assets, most companies are owned often by tracker funds. Those indexes are sold to end clients, are going to be retirement funds, pension funds, and so on. Less so in South Africa. The retirement fund in South Africa is getting increasingly complex. So, for example, as I just heard this morning, there's more and more hedge funds based in South Africa that are now being successful in selling their services to American investors. But overall, there's more and more complexity into a retirement fund system, which may not always help the end investor, which in this case may be you. And then investment incorporating environment, social, and governance factors is fairly new. And there's one graphic I just thought to show you, which is a bit of a reality check for us in the industry and us kind of inside the promotion of environment, social, and governance factors. And that is the demand. There's the gray is less than 1%, is what is the demand that the funds have received for ESG? And it's like surprisingly low. Even on governance, you would argue that should be very, very large. So we have a lot of work to do to explain why ESG is important and what people need to know about. Perhaps one of the scariest findings I took from the study, this is a study asking people who manage other people's pensions. Okay? These are the people who run pension funds in South Africa. And one of the questions was, there's been a fraud, I don't know if you're familiar with it, $100 million of blue-collar workers' money disappeared through a bad investment, kinds of intrigue, some politicians probably involved, they're trying to figure out what happened. But some of the scary kind of takeaways were, you know, I put down some responses, but some trustees didn't even know the fraud had happened. So you work in an industry where your role is to be custodian of money, but you didn't even know there'd been a huge incident and 100 million rand had disappeared. That's very, very troubling if we think about a healthy retirement fund system. And I think that for me, that also references a point that we had at one of our very first Africa.org events, where we had a very famous asset manager stand up and say, look, we've got to be very careful about saying these investments must have environment, social, and governance factors in them, when we, as an industry, or trustees in an industry, have our own governance issues that we need to come clean about and need to be managing. So finally, to just land on Africa and why we're doing the Africa.org Trends Report, this is an actual photo of an actual meeting between Graham and Brundtland, of the Brundtland Report, Brundtland Commission, 1987. And I were invited to speak at this event in Nigeria. It was a very positive event for me, representing the mandate also for Africa.org, but it's meeting really interesting people from across Africa who are very focused on corporate sustainability and responsibility and the view of investors. I was very much impressed with Graham Brundtland herself. She's 73 now. She flew like unbelievable connecting flights from Oslo through London, through Lagos to Calabar State where we were, to get to this conference because she feels so passionately about sustainability. But she's really, really positive and keen to see what happens in Africa. So for me, that partly explains why we're building this Africa.org Marketplace Trends Report. I said at the beginning we had a bunch of open questions and we had some answers. Well, what we're trying to do with Africa.org Marketplace Trends Report is we're trying to generate more answers, or at least be clear on what the NAs and the zeros are. So we're running that project. We would welcome any, let's say, smart or sharp academics or students who would want to be part of that project. We have a role for them in kind of how we set up the analysis process and plugging them into the team. And if you follow the website, that can take you there. So those are my prepared comments, and I've used up all of my time, but we did start a little bit late. So if you don't have to rush out, we can spend another 10 minutes taking questions. Rolf, what should I do?
Feel free to take questions. So should we go for another 10 minutes? And people that need to leave, maybe just stroll out, and then up in 10 minutes time we can maybe thank you and close.
Where's the Great. So shoot, any questions you have? Yes.
Thank you so much for your presentation. I would personally to suggest something. I don't know if you have been interested on that, looking on to SASA. Actually, SASA investing there's billions of rand on old age fund and disability fund. To look at your ESG, I can be high on that because my NPO actually has been interested on looking onto all those people. They have been managing the fund that the government is giving them is completely overspent, or sometimes they end up on alcohols and drugs. And so I don't know if you will maybe interest on that, and I'm keen as well to deliver some of the research on this.
And I didn't deal with performance here today. It's not something we dealt directly with the study, but we may have to do with the trends report. There's an excellent report that's just come out from the IFC in June. I haven't seen the actual research paper, but I have seen the slide deck. And there's an outperformance that the IFC's own portfolio that's invested in emerging markets, chunks of it in private equity, an outperformance using, now these are all IFC's investments, so they would have gone through their process. Between those companies that are leaders and laggards, they had like 5 categories. They've got an outperformance of, I think, maybe 300 to 500 basis points. So if you're interested in that study, just send me an email, info@sinclair.com, I can hook you up. There are all those other studies. I'm sure if you've studied anywhere in the space, you know there's many studies and holes in the studies. I know all about that. But this one's particularly interesting for me because obviously it deals with the client, but also it's in emerging markets and it's the actual portfolio. So the chances of the data being kind of coherent and robust, I think are good. More questions? Rob?
Yeah, I mean, if the government equities pension funds has signed up to the principles and is driving this agenda, I mean, what is the proportion of the JSE?
So it can be 15 to 25% of any stock.
Across the, well, so that basically that explains why in South Africa it's about 20% of assets under management that have ESG, that would qualify as sustainable investments. So I mean, without the GEPF, there would have been precious little, wouldn't it?
That's our view. So then your next level of investigation though is the GEPF's agent is the PIC. If you interview more than 2 PIC investment managers about ESG, your conversation could be very short. So I want to be clear on differentiating between policy decisions, process decisions, practice outcomes, and performance outcomes.
But that was my follow-on question was, if you're a company that GPF is invested in, how much do you feel that stated commitment by the GPF? And you're suggesting not necessarily all that much.
If someone would like to fund a study, I'd love to write it, and I know where I'd look for some answers, and I'd have to go find some other answers. I think it's variable. I know that the GPF, for example, have staffed up. They've added 2 staff this year, so there's now 3 in the ESG team that sits under the head of actuarial and investments. So I think they're going to be more prominent. But I think to date, it's been mainly policy, starting to get process level, practices, not so much performance. Yeah. So another way to get at this for me is kind of a X factor question is if GPF owned 50% of Sunral fixed income securities, how much were they invested in round 1 or 2 of the renewables program? If their proposition is that clean economy and low carbon is very important, shouldn't they also have been 50%? Is one way you can start asking. Okay, other questions? Yeah.
Thank you very much. In one of your slideshows, we saw you focus on HEV, on risk management, environmental and social issues. But I think you talk about malaria also as a disease. It kills more than HIV, especially in my country. I think it's very important to focus on that also. Or if you don't mind, probably it's not a problem for your investment in Africa, but I think malaria also should be there.
No, that's a wonderful feedback. relevant here. And the crossover of what are company issues that become, how are public health issues, private sector or company issues, or investor issues. And one way that's playing out currently is, for example, in this access to nutrition index we're doing. So right now, the single largest non-communicable disease in the world is driven by obesity. That leads to diabetes and so on. If you look at the graphs, in the 90s, I remember seeing my first HIV/AIDS graphs that looked like that, and they were exploding the epidemic to me. If you look at obesity graphs, they look exactly like that. It's truly scary. And South Africa has got in the low 60% overweight and obese people. And if you go to any shopping mall on any given day, that checks out, or any bus stop, whatever, or rugby stadium. So here we have a situation where investors are investing in companies, and those companies are selling products, or selling them in a way, marketing them in a way, that are contributing to obesity. Well, what is the role of the investor? So there is a role, and so how could we play in malaria? So thank you. That's all. Yes.
Just wondering if you've come across any research with regards to communication to investors, especially now with Regulation 28. Are the investment companies now actually communicating to their investors about SRI, and what's the return on that? Just as you were talking, saying how many of us have actually asked our investors, what's happening in that space?
Sure. So I have to ask them, by show of hands, who has explicitly asked their financial advisor, planner, or investment manager to integrate ESG factors in their investments? Okay. You've demonstrated in a market economy why I have a small consulting business. I'd like a larger one. But we have a huge, I did this yesterday. So first, please, your takeaway, if I can, call to action. You need to get hold of whoever's running a unit trust fund, your pension fund, your RA, ask them one simple question, feed me back the answer, I'll plug it into some study. So to answer your question, the communication, it's come up again in this pension study, where communication is a key issue. Trustees are calling for more training and education. So you might be shocked to find that the average fund spends, maybe meets 4 times a year as trustees, and maybe spend 2 days on investment training. And because 50% of your trustees must be employee trustees, which is important, representative, there's a good governance reason for that. But that means if you've got someone whose day job is driving a bus, you don't expect them to understand investments. So already there's like a challenge. So when it comes to communication, what I've seen is there has been some increase. Again, my flag on greenwashing, some of the stuff just is lame. And people need to poke holes in it, because if they don't, it stands up as being a real thing. But at a sophisticated level, for example, Riscuri here, but other vendors like Alexander Forbes or Towers Watson are trying to figure out ways to report back to their trustees or the fund owners on where the performance has come through and where the attribution could be linked to E, S, or G factors. So if there's a governance failure as a company, it drops 4%. Yeah, you can track that. Some of the other elements are kind of harder to figure. So if you implement an HIV/AIDS policy, what is the performance impact in 3 months or 24 months? That's going to be a harder attribution to make or communication to offer. But there is increased demand, and there should be, from trustees representing you.
You mentioned the disconnect between policy and practice. When you found out whether, when analysts or investors have ESG data, what are they doing? I mean, they're asking the question, are they not investing? Are they adjusting their models? And we've spoken to people who are saying, we've got all this data, but zero weighted within our analysts.
So all of those responses I have experienced, or has been my feedback. We have someone in the audience whose day job apparently it is to be an ESG analyst. So over drinks afterwards, I'd love you to interview that person. But it's important to understand too is that I'm positive. Okay, that's a key message. Is like I'm positive. The important thing is, and on a different presentation, I use a photo of my son who's a year and a half. I say by age 20, a generation, he should be able to ask me what I knew and what I do, but not what I knew. So in my lifetime, I expect more ESG in investment. It's a trend. The numbers coming from those trustees, frankly, I think they don't understand their membership that well, or their emails doesn't work, because so some of that data doesn't happen. So the trend is there globally, but also in South Africa. Whether they call it ESG or something else, that's something else we found in our studies, is that a private equity manager says, what do you mean corporate governance? It's just, do I trust him or not? It's like, no, but so there's some language later. But the ESG analyst with the integration can go from 0 weighting to 100% weighting. You can plug it in at different stages in your investment process. And the hard part is trying to find ways to measure that across your portfolio, for example, across your asset classes. So what you've had is, there are some fairly sophisticated approaches. So if you've got a listed only universe in a major developed country, you can do something pretty fancy with it. If you're doing something across 3 asset classes in an emerging market, you maybe get out there data that's hard to work with. So there is a range of activity around. If there are no more questions, am I free to go?
Yeah. Well, Graham, not only have you proven that in the investment world you have to define trends, yeah, but I think you've really illustrated what an exciting field this is and what great work there is being done, and